So hello everyone, this is CA Sanidhya Saraf, your friend, mentor and coach for audit and law. So we are starting with the first chapter, that is the chapter of company audit. I always advise that this is the first chapter that you are supposed to do. First you do company audit, then you do CARO 2016, and thereafter you can go for code of ethics, the standards of auditing, and then the other chapters, right? So now if we talk about company audit is covered in chapter number 10 of the Companies Act. Company audit is covered in chapter number 10 of the Companies Act. Now what is this chapter number 10? This chapter number 10 is the chapter number of the act. Very few of the students knows that every chapter has a chapter number, right? Every chapter has a chapter number, and this chapter number is quite useful for you for fetching good marks, because for every group of sections there is a chapter number. For example, if we talk about company audit, then we have chapter number 10 for that, and chapter 10 consists of section 139 to 148, right? We have chapter number 10, and this chapter number 10 consists of section 139 to 148, and this is read with the Companies Audit and Auditors Rules 2014. Now this sentence is quite useful for us. This information is quite useful for us at the time of presenting the answers. First of all, you have to repeat with me, company audit is covered under which chapter? Chapter number 10. Chapter 10 consists of section 139 to 148, and that is read with Companies Audit and Auditor Rules 2014. Okay, fine. What are the contents we are going to discuss in this chapter? We are just going to discuss all about company audit, the appointment of auditors, with the statutory auditors, with the chartered accountants. You know, we are very proud to say that we are the only person chosen in the world to be the statutory auditors of the company. So how our appointment is done, how our removal is done, what are the grounds for our disqualifications, right? Who fixes our remuneration, what are our rights and duties, what are the services we can provide, what are the services we should not provide, right? What are the penalties that can be levied upon us, supposingly if we are contravening something. In our audit report, what we are supposed to include. So all of this we are going to study in this chapter, and that is split into section 139 to 148. So first of all, logically let us understand the flow of sections that we are going to study. First of all, we have section 139, and in section 139 we are going to study about the appointment of auditors, because I think it is very logical. First of all, the auditor will be appointed, and only then the entire story shall commence. So first of all, section 139 talks about appointment of auditor. At the same time, section 139 talks about provisions like rotation of auditors. Then we have deemed reappointment, and we have casual vacancy, right? Now exactly what is the opposite of appointment? Exactly opposite of appointment is removal. So section 140 talks about removal of auditor, right? Removal and resignation. This is just to remember the flow. So now just think, why is the auditor removed? Why is the auditor removed? The auditor is removed because he is disqualified. Now let me clarify, it is not that the auditor is removed only because he is disqualified. This is just to remember the flow of the sections and to remember the section number, that's it. So why is he removed? Because he is disqualified. So section 141 consists of qualifications and disqualification. So I believe it is clear, the flow is clear till now, and please note down simultaneously with me, because we have very limited time, and in this limited frame of time we have to complete the major portion, right? So first of all, we have section 139, that is appointment of auditor, rotation of auditor, deemed reappointment, casual vacancy. Then we have section 140, that is resignation and removal, and then we have section 141, qualification and disqualification. Now just tell me, whenever you are appointed, you are qualified, you are eligible enough, and you are appointed, what is the first thing you are going to talk about? Are you going to talk about your rights? Are you going to talk about your duties? No, you are going to talk about how much money I am going to get. So you are going to talk about the money, the remuneration. So section 142 talks about remuneration, right? Now when you have got your remuneration, you are settled, you know your remuneration has been fixed. Now you are going to talk about your rights and duties. Now you are going to talk about your rights and duties, that what you are supposed to do. So section 143 says what you are supposed to do, and section 144 is exactly the opposite. what you are not supposed to do, that is prohibited services, right? 144 is exactly the opposite, that is what you are not supposed to do, that is prohibited services. So section 139 we have appointment of auditors, rotation of auditors, deemed reappointment, casual vacancy. Section 140 we have removal and resignation. 141 we have qualification, disqualification of auditors. Section 142 we have remuneration. 143 we have rights and duties. 144 we have prohibited services, right? Section 145 talks about signing the audit report. Section 146 talks about the auditor's right / duty to attend the AGM. How to remember this? I'll be telling you a story for that. Then section 147 we have penalty, and what is levied upon the penalty? So section 148 के अंदर we have cost audit, right? Section 148 के अंदर we have cost audit. So this is the flow of sections. First of all, section 139, the auditor is appointed. The appointment of auditors, rotation, casual vacancy, deemed reappointment. Section 140 exactly the opposite of that, that is removal and resignation. Why is removed? Because it's disqualified. So section 141 that is talking about qualification, disqualification. Now just assume that you are the auditor, you are eligible to be appointed and you are qualified and you have been appointed. Then first of all you are talking about remuneration, and after remuneration you are talking about rights and duties. Now while performing duties, right, you just remember auditor has done something because of which he has got aids. Now please don't take this in a wrong sense, in a wrong manner. This is only for you to memorize the stuff, right? While performing the duties, the auditor has contracted aids, right? So do you remember that section 144 is aids? That is something prohibited. It's also a formula to learn the prohibited services. Now since the auditor has got aids, he is going to die, right? Since the auditor has got aids, he is going to die, and before dying the auditor is thinking that, what do you think? What do you think at the end time? Let me complete my obligations. So similarly the auditor is thinking, let me sign the audit report. So section 145, signing the audit report. The auditor is thinking, let me attend the general meeting and meet the members for the last time. So section 146, attending the annual general meeting, right? Section 147 is penalty for the contravention of the above sections. And in the penalty there is a cost incurred. So section 148 we have cost audit. So this is how you can memorize the sections. I always advise, spend some time, good 10 or 15 minutes, and just try memorizing it in the given flow, right? When we'll be done with the list of sections, I always advise you make a list of the sections, and then every morning in a similar manner, like you chant some mantra or something, you just chant these sections. So if you can give 5 or 10 minutes daily to chant the sections, within a week or so, you will be memorized with all the section numbers of your syllabus. So this is the trick and technique you have to follow. Now one more important thing, let us say, suppose in the exam the question is asked upon section 139, let us say rotation of auditors. Then in that situation, how we are going to write, how we are going to present? A normal student will present that, as per section 139 of Companies Act 2013. But because you are the student of Sanidhya Saraf sir, you have to present in the given manner, using all the information that I have provided you, right? How will you start your answer? As per section 139. Now I am just giving an example. You can apply in the entire audit, in the entire law process. As per section 139 of chapter 10, keep on underlining the good stuff, of Companies Act 2013. I have used the shortcut here. You are not supposed to use the shortcut. Read with Companies Audit and Auditor Rules 2014. And do remember, this stuff you will be writing inside both the margins. You are supposed to draw margins on both the sides, and you will be starting your answer in a manner that the examiner should be very much impressed with your writing quality. So this is how you are going to start. As per section 139 of chapter 10 of Companies Act 2013, read with Companies Audit and Auditor Rules 2014. Right. Similarly, in case of law, We have chapter number for directors, we have chapter number for investigation, for compromise. You can use that. Alternatively, there are different ways to start an answer, and the starting always matters a lot. For example, you could have also written that the provisions pertaining to rotation of auditors have been contained in section 139 of chapter 10 of Companies Act 2013, read with Companies Audit and Auditor Rules, right? So that could have been an alternative way of presentation. That is, the provisions pertaining to rotation have been contained in section 139, read with. You could have also written in this way. For example, Companies Act 2013 VIDE dot section 139. Then you can write elaborates the concept of rotation of auditors. It has been governed in chapter number 10, section 139 to 148, blah blah blah. So accordingly you can start the answer, and then thereafter you can write the real content. So this is again going to help you out to secure some extra marks. Now before starting with this chapter, let me give you a simple logic that is not only going to help you in this chapter, but it is going to help you in across the chapters wherever the reference of law is coming, right? Do remember, when we talk about company, there are two main authorities. Do remember, whenever we talk about company, there are two main authorities. One are the shareholders, who are the owners of the company, the MIBAP of the company. And then we have the board of directors who take care of the company on the behalf of the shareholders, right? So who are the owners? Shareholders. And who govern the company on behalf of shareholders? It's the board of directors. So accordingly, tell me one thing. When we are talking about, one is Malik, that is the owners, the shareholders, and another is board. So now you have to understand in the entire company law what are the range of the powers that the BOD exercises and what are the range of power that the shareholder exercises. Ultimately, the board of directors are responsible for all the routine decision makings of the company. But from time to time, they need the approval of shareholders, since the shareholders are the owners. I think you understand that well, right? So there will be situations in which only board resolution shall be passed and no approval of shareholders will be needed, because every time they cannot go to the shareholders and ask them to approve. On the other hand, there will be situations where the board of directors shall be requiring the approval of shareholders. Now the approval of shareholders is divided into two types. One is ordinary resolution and another is special resolution, right? Ordinary resolution matlab, you understand it very well, simple majority, 50%. The number of members who have voted, the number of members who have actually voted, we just need 50% of the majority out of that. And if we talk about special resolution, we need 75% majority. So definitely, I think you understand that it is difficult to get that 75% majority. It is comparatively easier to get that 50% majority. So 50% majority, 50% approval, that is ordinary resolution. That is normally required when the decisions that the BOD are going to take, that is not risky, that is common, that is routine. On the other hand, if there is any risky thing involved, that can actually be prejudicial to the shareholders. In that situation, special resolution will be needed. For example, you can just think and tell me logically. Just think and tell me logically. Making calls. The board of directors want to make call from the shareholders that you have purchased the share, please give us the call money. Just think whether any approval of the members will be required. The answer is no, because ultimately they are going to ask money from the members. So that is why no approval will be needed. Board resolution is sufficient. On the other hand, appointment of auditors. Now tell me, who are the owners of the company? Who are the MIBAP, the shareholders? So ultimately, who is responsible to appoint the auditors? The members, right? But is it a routine thing or it is an abnormal thing? It is a routine thing. So again, ordinary resolution will be passed, right? But declaration of dividend, let us say, again a routine thing. Ordinary resolution will be passed. Let us say approval of accounts, again a routine thing. Ordinary resolution will be passed. Buyback of shares. Now that is something prejudicial. So special resolution will be passed. Reduction of share capital, something prejudicial, special resolution will be passed. Shareholders' money you are taking in and giving loan to the directors, something prejudicial, so special resolution will be passed. Do remember one thing, in audit as well as in law, I can challenge you one thing. Even if you have not studied these subjects, 50% of the content is inbuilt in your mind. And if you realize that these subjects are going to become very easy for you. So during my teaching process, one of my teaching methodology is that I'm not going to teach you each and everything every time. I'm not going to do the spoon feeding. Rather, I'm going to ask you, you are the lawmaker. Just think logically and tell me the answer. You have to pause for a minute and tell me the answer, and believe me, you'll be getting the answer. And you will realize that most of the stuff you already know. Right? So this common thing you have to remember. So now, tell me one thing logically. Who is going to appoint the auditors? It's the members, because they are the MyBAP. But where will the members appoint the auditors? In the general meeting. I think it is logical. Yes. The members are going to appoint the auditors in the general meeting. Which resolution they are going to pass? Ordinary resolution. I think it is logical. Now, appointing the auditors is normal. Is removing the auditor also normal, or it seems to be abnormal? It seems to be prejudicial to the company. Now you will tell me, sir, it seems to be prejudicial to the company. So at the time of removing the auditors, special resolution must be passed. I think logical. Appointment of auditors over section 139. Removal of auditors, SR, section 140. Appointment of auditors over section 139. Removal of auditors, section 140, that is special resolution. Now the problem is that when we tell that, the auditors shall be appointed by the members, that is fine. But just think about the first auditor. Just think about the first auditor. The auditor is appointed for the first time. The company is newly incorporated. The auditor is being appointed for the first time. Now section 96 of annual general meeting. In that section you study that, first AGM. First AGM is far away from the date of incorporation. So should the company act without an auditor? Should the company wait for its auditor? The answer is no. First, practically you think there are so many shareholders. How will they come to a conclusion to appoint one single person? There must be a recommendation. Right, there must be a recommendation, there must be a proposal. So that is why it is decided that since the AGM is very far and the shareholders cannot come to a conclusion to appoint one person, so that is why what is it said that if the company has an audit committee, the audit committee shall recommend to the board of directors that look, this Mr. CA Sanidhya Saraf, he seems to be eligible to be qualified as an auditor, we want to appoint him. And if the audit committee is not there, the BOD will appoint auditors on its own. Because the AGM is very far, you have to understand, the AGM is very far. We cannot wait for the AGM. So that is why what the provision says that the first auditor of a company shall be appointed by the board of directors. Right? Normally, every auditor is appointed by the member in the general meeting by passing ordinary resolution. But this exception is only for the first auditor. Section 139 subsection 6 says that the first auditor of the company shall be appointed by the board of directors within 30 days from the date of incorporation. Right, within 30 days from the date of incorporation. Can you tell me the logic? Why 30 days? If you know the logic. If you study in section 173 in law, the first board meeting is held within 30 days. So if the first board meeting is held within 30 days, so obviously auditor cannot be appointed before that. So that is why it is given that the first auditor shall be appointed by the board of directors within 30 days from the date of registration. Right. Now just tell me logically, you tell me, ultimately who was responsible for appointing the auditor? It was the member. So now this auditor who the BOD has appointed, their tenure shall be valid up to AGM, annual general meeting. Their tenure shall be valid up to AGM. Why? Because in AGM, the members are going to appoint by passing a ordinary resolution. Exactly, this is the provision. That the first auditor has been appointed by the board within 30 days, the tenure shall be till the annual general meeting, and in the annual general meeting, the members shall be reappointing the auditors. They may reappoint the same person or they may appoint a new person by passing ordinary resolution. Right? And in case the BOD fails to appoint such auditors, in that situation, we don't have any other option. Then the members should interfere. Then they shall inform the members that we are unable to appoint the auditors. Please you do this ritual of appointing the auditors. And in that situation, the members of the company, what they will do is, they will appoint the auditors. Now, where the auditor will be appointed, the company has to convene an extraordinary general meeting. What the company has to do is, they have to convene an extraordinary general meeting. And in the extraordinary general meeting, they will appoint the auditor. And when this EGM will be convened? Next 60 days. Law says that auditor shall be appointed within 90 days. Anyhow, he shall be appointed within 90 days. Now BOD was supposed to appoint within 30 days. After that, how much days is left? 60 days. Right. It has also been clarified that before appointing the auditor, his written consent must be taken. ROC, the MIBOP of the company law. Registrar must be intimated. One more common thing you remember, that every important thing that happens in law, we shall be intimating to the registrar. It is like a temple whom we are required to intimate every important thing by filing a fees. So similarly, the company shall inform about the auditor to the registrar in 15 days. So take the consent of the auditor, inform to the registrar in 15 days in relevant form 881. Right. And as I told you, that only the first appointment shall be done by the board. Subsequently, section 139 subsection 1 says, if you remember the subsection, it is well and good. If you don't remember the subsection, no worries, no issues. You can just write section 139 chapter 10, read with rules. So section 139 subsection 1 says, the subsequent auditor shall be appointed by the members in AGM by passing ordinary resolution. Now, when the members have appointed the auditors, now this will give some permanency to the auditor because they were the genuine authority to appoint the auditors. So now the tenure has been fixed of the auditor. And this tenure shall be 5 years. Right? This tenure shall be 5 years. The first auditor appointed by the board within 30 days from the date of incorporation. Tenure is valid till the AGM. In the subsequent appointment, subsequent appointment shall be done by the members in the general meeting by passing ordinary resolution. Tenure is fixed 5 years. So if we say tenure is fixed 5 years, then counting from the conclusion of first AGM, it goes till conclusion of sixth AGM. I think it is logical. So the tenure is hold office from the conclusion of first AGM till the sixth AGM, subject to fulfillment of conditions. Now, whether this auditor can be reappointed or not, that will depend upon the fact whether rotation is applicable, and that we are going to see later. Now, this is the story of auditors of non-government companies. So, no intervention from the government side because no government stake over here. But section 139 subsection 7 says, what about the auditor of government companies? Now, the question arises, what is a government company? What is a government company after all? Section 2 clause 45 defines the government company as a company in which at least 51% stake is by the government. Now, this stake can be of central government or this stake can be of state government. There is also a possibility that it can be partially CG controlled and partially SG controlled. But do remember, the section says that the stake shall be of the CG or the SG or partially by the CG and the SG. Nowhere government company is given. So any stake by the government company, that will not make the company a government company. You have to understand. ABC company, 30% stake by the CG, 30% stake by the SG, it is a government company. ABC company, 20% stake by the CG, 20% stake by the SG, 20% stake by the government company. It is not a government company because only the stake of CG and SG is to be counted. One beautiful question came from this part, in one of the law papers, and most of the students made a mistake. So you have to be careful. Now, when we talk about government companies, so you must have studied that in case of government companies, an authority known as the Comptroller and Auditor General of India. He is the supreme authority. So in this situation, the appointment shall be done by the CAG because the supreme authority is the CAG. The first auditor shall be appointed by the CAG as well as subsequent auditor shall be appointed by the CAG. Right. Now tell me logically, first auditor was appointed by the board within 30 days. Right, in case of non-government company, but CAG is a government authority, it will take more time or less time? You give me a logical answer, sir, it will take more time. So 30 days ki jagah 60 days. Extension is there. So 139 subsection 7 says, the first auditor shall be appointed by the government company. The first auditor shall be appointed by the CAG in case of a government company within 60 days from the date of registration. If the CAG fails, now the story is same. If the CAG fails, now BOD intervention comes in. BOD shall appoint within next 30 days. And if the BOD fails, member shall appoint within next 60 days. I think similar was the story in case of auditors of non-government company in 139 subsection 6. Appointment by the BOD within 30 days. If the BOD fails, then the members within next 60 days. Here also it is same. Only that additional layer of CAG has come. The first auditor shall be appointed by the CAG within 60 days from the date of resignation, and in case the CAG does not appoint such auditor, then the board of directors shall appoint such next auditor within 30 days. And if the board of directors do not appoint, the member shall be appointing in the next 60 days. Right. And again that common story, before such appointment is made, The written consent of the auditor must be taken. All those stuff is there. The company shall inform to the ROC within 15 days about the appointment of the auditor. So that is common over here as well. Subsequent appointment. Now subsequent appointment shall be done by, in case of non-government company, members. But in case of government company, it's the CAG, Comptroller Auditor General of India. Now you have to remember this time limit. Within 180 days from the commencement of financial year. So what is the financial year? 1st of April to 31st March is the financial year. When we tell 180 days from the commencement of financial year, normally you can understand as by 30th of September. Right. Again, he shall hold office till the conclusion of AGM. So this is very important. Because in case of non-government company, if the auditor is appointed, he shall hold the office from the conclusion of first AGM till the 6th AGM. Yani there is a fixed tenure of 5 years. Jabki in case of government company, the tenure shall be only on a AGM to AGM basis. So that 5-year tenure principle is not applicable. Right. So I believe it is clear. So this is the auditors of government company 139 subsection 7. So I believe you are clear with the appointment part. Rotation we are not discussing yet. We'll discuss it later. Now, coming to an important provision in the section 139 subsection 8, casual vacancy of the auditor. What is casual vacancy? What is casual vacancy? Let us say Mr. Ram has been appointed as the auditor of a company and later on Mr. Ram has resigned, and because of that a casual vacancy has arose. There is a vacancy in the office of the auditor. Or another situation may be that Mr. Ram, suddenly he has become unsound mind. He is a person of unsound mind. He has lost his mental balance. So again in that situation there is a casual vacancy. Someone must be appointed in his place. So section 139 subsection 8 which talks about casual vacancy, that who shall fill the casual vacancy. Now tell logically, Mr. Ram, he was appointed as an auditor, he was a chartered accountant, suddenly his mental balance got lost and there is a casual vacancy. Now again should they call the EGM, should they call the AGM just to appoint the auditor? Do you think it is logical? No. So again here it is said that for the time being the board of directors shall appoint within 30 days. For the time being, the board of directors shall appoint within 30 days and fill the casual vacancy. But if the casual vacancy is due to resignation, now be very, very careful. If the casual vacancy is due to resignation, right? If the casual vacancy is due to resignation, now the story is different. Because if the auditor has resigned, there is something fishy about it. There are chances of fraud over here. So here it is said that, the casual vacancy has to be fulfilled by the board within 30 days. But at the same time, this appointment must be approved by the company at a general meeting convened within 3 months of the recommendation of the board. So this is very important. If casual vacancy has arose due to resignation of the auditor, the board of directors shall fulfill the casual vacancy within 30 days. But at the same time, this appointment shall be approved by the company at a general meeting and we shall not wait for the general meeting. This general meeting shall be convened within 3 months. And hereby the auditor shall be appointed. So I believe it is clear. So again, this is something very, very important. 139 subsection 8, that is casual vacancy of the auditors, right? Casual vacancy of the auditors. And then we have the last two concepts of the section. This is the biggest section in this chapter. Section 139 subsection 2 to subsection 4 that talks about the rotation of auditor. And then we have section 139 subsection 9 that talks about deemed reappointment. Now what is rotation? What is the logic of rotation? See, what was happening is that an individual or a firm was appointed as an auditor. You know very well that either an individual who is a chartered accountant, he can be appointed as an auditor, or either a firm of chartered accountants can be appointed as an auditor, right? Now what was happening is that they were appointed for 5 years, then they were reappointed. Again the tenure expires, they were reappointed. Again the tenure expires, they were reappointed. And the appointment continues till hundreds of years, their generations are getting appointed. And when the same person is appointed as an auditor again and again, there is a chance of collusion with the management and frauds not being detected. That was what happened in case of Satyam. That was what happened in case of many frauds, right? In case of many corporate frauds. So the concept of rotation was enacted. So under the concept of rotation, what we say is that, look, we are not talking about the private companies. We are not talking about the small companies. Private companies, maybe there can be big, there can be small. We are not talking about the small companies. But all the listed companies where the public interest is involved, at least all the private companies which are big private companies, there we shall restrict the tenure of the auditor. He cannot be appointed for a lifetime. There must be a concept that he is appointed for a certain period and then instead of his place someone else is appointed. So that there is a fear in his mind that suppose if I collude with the management, someone else might come and he might actually find the frauds that I have done. So that is the concept of rotation, right? So exactly what is the concept of rotation and into which companies it is applicable? The concept of rotation is applicable to all the listed companies. I believe it is very logical. Generally to all the listed companies, all the stringent provisions of law are applicable because all the member stake are involved over there. Then the concept of rotation is applicable to all the unlisted public companies whose paid up share capital is 10 crores or more. Right, unlisted public companies whose paid up share capital is 10 crore or more. Or this concept is also applicable to a private company. But private company, if it is a private company, then logically you think paid up share capital limit will go higher because risk is comparatively less than an unlisted public company. So paid up share capital is 50 crores or more. So applicable to listed company. Applicable to an unlisted public company whose paid up share capital is 10 crores or more. Or a private company whose paid up share capital is 50 crores or more. This you have to memorize 10, 50, 10, 50, 10, 50, 10, 50. Or any company, now mark the word any company, which has a public borrowing from financial institutions, banks or public deposit 50 crores or more. So let us say there is a private company, it has taken some borrowings from bank. Let us say a private company which has taken borrowing from ICICI Bank 30 crores, SDFC Banks 25 crores. So the aggregate is 25 crores. And let us say the paid up share capital is only 25 crores. So there it is a private company, the paid up share capital is only 25 crores, that is less than the 50 crores. But it has the aggregate of borrowings from ICICI 30 crores, SDFC 25 crores. So aggregate of borrowing from financial institution exceeds 50 crore rupees, and that is why even to that very company rotation is applicable. But let us say in this example, the company has taken loan of 30 crore rupees from the SDFC and 30 crore rupees, let us say from Vijay Mallya. So now tell, is the rotation applicable? You will say yes, 30 plus 30, it exceeds 50. But against, read the wording. Aggregate of borrowing from financial institution, bank or public deposit. So practically that loan from Vijay Mallya will not be counted. Rotation is not applicable. So you should understand that. Let us say, for example, there is a company, ABC company, which is a listed company. It has a paid up share capital of 10 crores. It has taken borrowings of 20 crores from SDFC, 20 crores from ICICI, 20 crores from Vijay Mallya. Is the rotation applicable? Paid up share capital was 5 crores. So ABC listed company, paid up share capital 5 crore, borrowings aggregate if you see 40 crores because Vijay Mallya will not be considered. So now in this situation, rotation is applicable or not? Not applicable. Think again, it is applicable because the question was listed company. So you don't have to see anything. That was just to fool you actually. A private company, it has taken a public deposit of 60 crores. Is the concept of rotation applicable? Yes, sir. You have told company having public borrowing from public financial institution, bank or public deposit. That's fine. But think logically. Private companies, are they allowed to take public deposit? No, they are not allowed to take public deposit. That is a contravention in the first place. And this concept of rotation is not applicable to one-person companies and small companies. And now if this concept is applicable, what will happen? If an individual is appointed as a chartered accountant, his term will be defined for one consecutive term. And what is one consecutive term? 5 years. He can be appointed for a period of 5 years. After 5 years, there shall be 5 years of cooling off period. What is the 5 years of cooling off period? In that 5 years, I will have to step down from the auditor's post. Right? If I am the individual who was appointed. And instead of me, some other person shall be appointed as the auditor. And in case of a firm, because in case of firm the partners are more, the independence is more, so it is given 2 terms. They can be appointed for 2 terms of 5 consecutive years. And again after this 5 consecutive years, there shall be a cooling off period for 5 years. Right? Now, what is the logic behind it? So that in that period of 5 years, some other firm comes and do the audit. So that the chances of collusion becomes less. But then our brain is a very devil mind. What will think? We'll think, okay, let us do one thing. For example, let us say the firm was ABC Limited, in which there were 3 partners, A, B and C. Our tenure of 10 years is over. But Mr. A is a partner in another firm. So what we are thinking is that let us make that other firm the auditors. Yeah, let us say we have a associate, we have a network, we have an associate, we have a network. So let us make that associate, that network with a common brand name, the firm in that 5 years of cooling off period. So lawmaker says that we are not fools. And that is why what the lawmaker has told is that in that cooling off period, the other person who is appointed, the other firm who is appointed, they shall not be having the common brand name. They shall not be having the common trade name, as well as there shall be no common partner, as well as there shall be no common partner. If there is any common partner in the other firm, eventually the firm will also get disqualified and cannot be appointed. So that is something you have to study. But now there is a loophole in the law over here. What is the loophole? Just read the wordings of the Bar Act. On the date of appointment, no audit firm having a common partner or partners shall be appointed. So the wording here is on the date of appointment. So what it means, let us say a firm ABC was the auditor of the company. Mr. A was a partner in another firm. On the date of appointment, if Mr. A is a partner, that new firm cannot be appointed. But what if Mr. A becomes a partner in the other firm after 6 months? What if Mr. A becomes a partner in the other firm after 6 months? Then the provision of law gets defeated, because the literal meaning turns out to be something else. So in these situations, I always tell you, you always write the answers as per the literal interpretation of law as well as logical interpretation of law. Literal interpretation of law means don't apply your minds. Read the law as it is. If in the law it is said that on the date of appointment no audit partner must have a common partner, just don't apply your brain and answer according to that. But logical interpretation of law says that if applying the interpretation of law, if applying the literal interpretation of law, the purpose of law gets defeated, think logically and take the other view. So in the exam you can write both the views, and you will be surprised that question upon this came. Exactly the same question came. That on the date of appointment, there was no common partner, but one partner joins the other firm after 6 months. And the institute has given the answer considering both the views. First of all, they have answered giving the literal interpretation, that there is no disqualification in this case. Most of the students wrote that there is a disqualification because they did not study these words carefully and they got 0 marks. And the other alternative they have given is that you can also answer as per the logical interpretation. But if you are answering as per the logical interpretation, you also have to write the literal interpretation first. Right? And again, it is giving that the incoming audit firm or the individual cannot be appointed as the company if such auditor or audit firm is associated under the same network of CA firms. Right? Under the same network. And now what is the same network? So in May 20 RTP in the Chartered Accountants Act, they have given a thorough definition of what is network. So you will study in there what is the network, right? We'll study in details there what is the network. A thorough concept has been elaborated there of what is the network. One more thing you have to remember, what was given is that if I am appointed as an individual, 5 consecutive years I shall be appointed, then 5 years cooling off period. If I am a firm, then 10 consecutive years, then 5 years cooling off period. But the wording is used as 5 consecutive years. So here a planning might arise that let me do one thing. I will not be appointed for 5 consecutive years. If I am a firm, I will not be appointed for 10 consecutive years. Rather, what I'll do is that I'll be appointed for 5 years, I'll be taking a break of 1 year, and then again I'll be appointed, because then 10 consecutive years will never become 10 consecutive years. That might be a planning in our devil brain. So again the lawmaker says that any break shall be considered as a break for the purpose of rotation only if taken for a period of at least 5 years. Right? So lawmaker says that any break shall be considered as a break for the purpose of rotation only if taken for the period of 5 years. So that is again you have to think, and that is again you have to keep in mind. And thereafter lastly we are coming to the concept of deemed reappointment. Now do remember this concept of deemed reappointment that is governed under section 139 subsection 9. This is applicable only if the concept of rotation is not applicable. This is applicable only if the concept of rotation is not applicable. What it says? Can the retiring auditor be reappointed? Can the retiring auditor be reappointed? The tenure is over. The tenure of 5 years is over. So can he be reappointed? So if a rotation is applicable, you know very well that he cannot be reappointed and there is a cooling off period of 5 years. So we are not talking about rotation. We are talking about cases other than rotation. So logically think, if the rotation is not applicable, there is no restriction on reappointment. He can be reappointed. It is very simple. But just think logically and tell me that suppose if the person is disqualified, then shall he be reappointed? The answer is no. Suppose he has submitted his resignation, then can he be reappointed? The answer is no. Suppose members of the company don't want him to be appointed and they have appointed some other person in his place, then can he be reappointed? The answer is no. The same thing is given over here. Retiring auditor shall be reappointed if he is not disqualified for reappointment. He should not be disqualified. He has not given the company a notice in writing of his unwillingness to be reappointed. And special resolution has not been passed at that meeting appointing some other auditor or providing expressly that he shall not be reappointed. So he may be reappointed, but if he is disqualified, he shall not be reappointed. If he has given his resignation, he shall not be reappointed. And if the members have appointed someone else by passing a special resolution, he shall not be reappointed. I believe it is clear. And section 139 subsection 10 says that where at any AGM no auditor is appointed or reappointed, the existing auditor shall continue to be the auditor for the time being till the new auditor is appointed. So in section 139, it is the lengthiest section of the chapter. Section 139 and 143, these two are the lengthiest sections of the chapter, right? So in section 139, we have studied the appointment of auditor. We have studied the concept of rotation. Appointment of auditors, that is 139 subsection 5, 6 and 7. Mainly in these three sections it is covered. Then we have studied the concept of rotation, subsection 2 to subsection 4. You can even write the subsection number in a broad category. For example, if you don't remember specifically which subsection consists about that particular point of rotation, you can just write, if a question comes upon rotation, that the provision pertaining to rotation of auditors have been governed in section 139 subsection 2 to 4 of chapter 10 of Companies Act 2013, read with the Companies Audit and Auditor rules. Then we have learned about deemed reappointment, 139 subsection 9 and 10. We have learned about casual vacancy, that is the concept of 139 subsection 8. So these are the different provisions that you need to remember in this very section, that is section 139.